Traders at Axis Bank project depressed system liquidity will continue to dampen market sentiment as investors adopt a cautious approach. Meanwhile, data from the CBN shows Nigeria's net total forex inflow closed the year 2022 at $72.4 billion. Ladi Belo, fixed income dealer at Axis Bank, joins me now. Ladi, thank you so much for joining us on the show today. It's been quite an interesting Monday. Let's start off midweek. It's been quite an interesting week so far. Let's start off really now looking at the initial PMA we saw for Monday. It was an offer about 360. Talk us through the subscription rates we saw so far from Monday.
Hi, good afternoon. Thank you for having me. So at the bond auction that we saw on Monday, we saw the usual 90 billion being offered by the DMO across the four buckets, the 2028s, 2032s, the 2042s, and the 2050 maturities. By and large, we saw an increment in yields across board, but what we noticed was a bit of a resilience in the yields of the longest tenured paper, which is the 2050 maturity, which was offered again at 15.8% at that auction. We saw the 2028s and the 2050s being the most actively sought out papers, stemming from their subscription, which were the highest across board, and also the subscription generally was the lowest that we've seen this year, with about 480 billion being subscribed for, when compared to the usual closer to the 1 trillion mark across the standard buckets. But we saw the 2028 maturity, which is the shortest tenured bill. We saw a bit of size on that going to the market, and also some non-competes to kind of keep the rates where it was, and for the DMO to be comfortable raising significant size at those levels as well.
And let's also talk about investors also positioning and also responding. We've had inflation numbers coming for the month of April, 22.2. We're also seeing a dip in our net inflow into Nigeria, also dipping to about $72 billion. And take a look at what the IMF is also saying, cautioning about the weakening Naira and other SSA currencies. This is definitely contributing to the rise in public debt. How has the market responding to all of these feelers right now?
I think by and large, the market has priced that in. Like you rightfully said, we have inflation about 22.22% stemming from March's release at about 22.04%. So we've seen a steady rise in inflation, which is generally combated by the hawkish stance of the CBN, they've typically raised the monetary policy rate to kind of combat rising prices across the globe. But we expect to see a bit more of an increment. We're currently at 18% on the MPR. We expect to see a further increase to combat this rising inflation to roughly around 18.5%. But with regard to the IMF, we've seen staff level agreements with nations like Kenya and Egypt, and obviously the most prevalent,
talks with Ghana too. Yes,
exactly, most prevalent, which is Ghana, and there's an agreement, or there's a meeting between the IMF and Ghana that will be conducted today, and a virtual meeting with all the stakeholders tomorrow, which would give us more insights about how they'll be able to access the 3 billion facility. But what we've heard is upon the first instance, upon agreement, we'll see the first tranche, which is $600 million being disbursed to the federal government, another 600 billion, and in tranches of 350 all the way till they hit their 3 billion mark. But you're right to say that we're seeing a bit of pressure on the external debts of some of these sub-Saharan African countries, and we expect this trend to persist, given the inability to generate excess revenues within these nations. Also, the fact that they're not able to access these foreign markets to roll over their existing obligations.
Ladi, just wrapping up the conversation. System liquidity is currently depressed. How do you see things panning out in the short term as we're wrapping up the month of May?
Honestly, system liquidity has been depressed for a few weeks now since the April 27, the maturity that we witnessed there, where system liquidity was around the 1 trillion mark, but we've seen it dwindle for several weeks, and now we're currently up flat, stemming from the bond auction debits. But by and large, we'll continue to see the market play within the 20 to 30 basis points band, which we've seen for the last couple of weeks, like I mentioned earlier. But by and large, as the liquidity in the system remains depressed, we're going to see a bit of increments in these yields, especially on the shorter term maturities, which should also mirror the belly of the curve. So what we'll expect to see will be more of a flat yield curve as opposed to a normal yield curve that we've seen in previous months.
Thank you, Ladi, for your time on the show today and doing this analysis with me. That was Ladi Belo, fixed income dealer at Axis Bank.